Alright guys, let's talk about what I currently see happening with AMC stock, why I'm actually very encouraged with the technical picture here. If you guys can't see it from this chart right now, we will break it all down for you guys, give you guys the data you need to know in a very short, condensed video. But at the same time, I want to talk about this theory that I have. It's still in play, but not everyone fully understands when the Moass is actually going to happen. This is a theory I've been talking about for a very long time, and it's essentially when the stock market crashes, AMC stock will rally, but it's not black and white just in that form. So we're going to dive into all of that information. Hit the like button, subscribe to the channel, do what you guys got to do in that regard. Thank you guys for tuning in, and let's get straight into it. So the first thing I want to talk about is the theory, and a lot of people watch those videos, but they only took away that one part that I just mentioned, that when the stock market falls, AMC stock will rip. And that is not the case. I never projected that to be the case. It's not black and white like that. You need to see a catalyst with AMC stock. And the reason why the market's coming down, bond yields going up, essentially hedge funds getting squeezed in terms of seeing their portfolio values going down is so bullish is because what we've seen in January, what we've seen in June of 2021 was the stock market hitting new all-time highs. Capital was very cheap. You've seen Citadel going in and bailing out other hedge funds. That will not happen today with capital so expensive, with the equity markets with this much fear. That will not happen. At the same time, pretty much all hedge funds have less capital on hand, less capital to service a margin call if AMC gets a catalyst and can actually make a move to the upside. Now, that's the key. You need to see a catalyst and the markets in the toilets. That's what happened to Volkswagen, and that is what I expect to happen here again. And I think we're seeing very encouraging signs of exactly this playing out with AMC stock right now. If you look at the technical picture here, it's looking very good. We broke out above the 50-day moving average, went all the way up to almost $15 per share, came down slightly, found a little bit of support, came down, found support around $12.77 per share, this secondary line I have drawn right here, and then we came right back up and we retraced to the upside from that level we seen earlier in the day today, and we are holding above now currently the 50-day moving average. So this looks like to me this 50-day moving average is turning into a level of support yet again, and we should be able to make a pretty decent move off of this moving average, especially once the markets do start to turn a little bit more bullish. The markets have been pretty much straight up for the better part of the day since we did hit that low at 372.56, and AMC on a technical basis is looking beautiful. The RSI is at 52.89. The MACD extremely bullish. So all of these factors here that I'm outlining look really, really good. And you can even see we're slightly down. We're down less than 1% on volume that is only 21 million shares heading into the last half an hour of trading or so for the day. So I think that is very encouraging that we can actually see a pretty positive day relative to what is happening with other stocks in the stock market on a very low volume day. So I think that is very good. Watch to see if we do officially close above the 50-day moving average at $13.34 per share. It looks like we will, but anything can happen in the last half an hour of trading. As you guys do know, it can get pretty eventful, but we are in an overall slight uptrend, and I do think we could be primed to really break out in a big way. If you go ahead and take this line and draw this descending resistance line and ascending support level, you can see we're pretty much at the level where I would expect to see a bigger move and to break out above this descending level of resistance. It's pretty textbook what we're actually seeing right now, so I do think we'll see a pretty decent move to the upside. Now let's go ahead and take a look at the Ortex data and go ahead and refresh this page, because we are seeing cost to borrow rates that are still extremely high at 34.08%, cost to borrow average at 22.46%, cost to borrow minimum at 12.51%. At the same time, you see a lot of shares that are available to be lent out, about 850,000. Cost to borrow rates look like they're over 20% for today alone. Yesterday they were sitting, and earlier in the day they were sitting at about 25%, but that is still a very, I'm yawning. Still very high numbers that we are currently seeing. The dollar value of shares that is currently sold short is estimated at 1.37 billion. Short interest of free float 19.53%. Free float out on loan 31.68%. Shares out on loan, it says 163.31 million. Days to cover 3.52. Cost to borrow, it says almost 19. 100% share utilization. The estimated short interest is 19.53%. Over the past 7 days, they claim, Ortex claims, the short interest went from 22.5% to 19.5%. That would be a move down of about 3%. It doesn't look like, from the price action, from the low volume that we have been seeing, that any shares were covered in a substantial way. The last reading we got was June 15th. And we did have 113 million shares sold short and 21.92% short interest of free float. So I think that is pretty important to point out. The last reading we actually got was close to 22% short interest. And you are seeing a lot of call activity for the day. Look at this July 15th $13 call, $261,000 worth. A option that expires tomorrow, a $13 call, two of them for $130,000. Another one for $110,000. July 15th $13 call for $200,000. July 22nd $13.50 call for $45,000. July 15th $15 call for $29,000. So it looks like you've seen a decent amount of option activity today. And from what Ortex is saying, we have seen 5 orders totaling $745,16,000, positive order value of 100%. So I think in that regard, it's also looking very good. The max pain for this Friday, let's go ahead and refresh this. It looks to be $13 per share. So again, that's about where we are at right now. Max pain is not a science, but we do tend to hover near that max pain price to close out a week. Oh my gosh, why am I so tired? I'm not even tired, I'm just yawning. July 1st, for this Friday, we do have about 24,000 calls that are currently in the money, 139,000 calls that are out of the money, so it is possible to get one of those mega bounces, coming tomorrow, coming on Friday, if you do see a very positive reaction in the markets, and we can start to break out above key levels. For the next following week, not this week, but the next week, you do have about 5,200 calls that are in the money, 51,000 calls that are currently out of the money, 3,300 puts that are in the money. And for the week of July 15th, the big expiration, you have about 26,000 calls that are currently in the money, 457,000 calls that are out of the money, 87, almost 88,000 puts that are in the money. So a lot of potential buying power that could come from the options. And I do expect that, to play a big role, especially if we can get a catalyst here before July 15th. If we can get any kind of catalyst for AMC stock, that will be a very good thing. Now, the Fed's preferred inflation measure rose 4.7% in May, around multi-decade highs. And the biggest thing that is really catching the markets today and why we have seen a bullish reaction is disposable income and inflation adjusted spending both declined on the month. So you're seeing a decline. That is not so good. But what you're seeing in the bond market is the yield, or the essentially what you'd get paid out on a bond if you bought it today, is dropping about 0.11%. So the markets are fearful about a recession, and that's why investors are buying bond yields, driving down interest rates. At the same time, that is really helping out the equity market. It makes cost of capital not as expensive, and that is definitely a bullish thing for the short term for the stock market. But all in all, the main points to take out of this video, specifically around AMC and the Moass, is you need to see a catalyst, not just the markets falling, to see AMC stocks start to rally. I know a lot of people are kind of confused on that, but you really just need to see a catalyst. In my personal opinion, anytime will do, and we should see a pretty explosive move to the upside. So that is going to be all for this video. Hit that like button and subscribe to the channel. Thank you guys for tuning in. Enjoy the rest of your day, and I will see you in the next one.